All right, today we're going to dive into a really cool and kind of subtle signal in the world of technical analysis, the Harami pattern. You can think of it as a quiet whisper from the market, a little hint that a big change might be brewing. Let's get right into it.
So you might be looking at a chart and wondering, how on earth can just two of these little candlesticks tell a whole story about a power struggle between buyers and sellers? Well, that's exactly what we're about to break down. And the name itself is a huge giveaway. Harami is actually the Japanese word for pregnant, and that's literally what it looks like. You have a big mother candle followed by a smaller baby candle that's tucked right inside it. This whole pattern is about a loss of momentum, a signal that a trend might be getting ready to turn around. Okay, so how do you actually spot one of these things out in the wild? Well, it's all about understanding its simple but very specific anatomy. Let's take a closer look. It's really just a two-step thing. First, you've got to have a strong trend already in motion, and it's marked by a big dominant candle. That's the market really showing its strength. Then, and this is the key part, the second candle shows up. It's small, and its entire body is contained within the body of that first candle. This is the very first sign of hesitation, that pause in the action. Now, this is super important because a lot of people get this mixed up. The Harami is basically the opposite of an engulfing pattern. An engulfing pattern is like a hostile takeover, big, decisive, aggressive. The Harami, though, is all about containment and indecision. It's telling you that the powerful momentum that was there just a moment ago has suddenly hit a brick wall. So let's see how this pattern tells us a story that's unfolding in the market. First up, we've got the Bullish Harami. I want you to think of this as the exact moment the sellers, the bears, finally start to lose their grip after a long downtrend. So picture this. The scene opens with a strong downtrend. We're seeing a big red bearish candle. This tells us the sellers are totally in control, just pushing that price down, down, down. The whole mood is pessimistic. And then this happens. The momentum just stops dead in its tracks. This quote right here perfectly captures that turning point. All that downward pressure just seems to evaporate. The sellers can't push the price any lower. And this is the moment when buyers start to peek out and test the waters. What you get is a standoff, and it's visualized by that small green candle. It basically represents bearish exhaustion. The sellers are just tired. But at the same time, it's showing us that there's some new buying interest. Now, it's not a full-on reversal yet, but it's a huge sign that the balance of power is starting to shift. Okay, so let's flip the script and look at the exact opposite scenario, the bearish Harami. This is the story of a really powerful uptrend that suddenly hits a wall of doubt. So here, the market is flying high in an uptrend. We see a large green candle, which is just pure buyer optimism. Everybody's feeling great, prices are getting pushed higher and higher. It feels like the rally will just never end, right? But then that little bit of doubt starts to creep in. As this quote points out, the buyers just can't keep the push going. And why is that? Well, it's because the smart sellers are starting to take their profits, and any new buyers are starting to hesitate, wondering if maybe they're too late to the party. And this right here perfectly illustrates that psychological shift. That little red candle sitting inside the big green one, it signals a massive pivot from greed to caution. The upward momentum is gone, and the market is now set up for a potential downturn as sellers start to feel more confident.
So we can spot the pattern, we get the story it's telling, but how do traders actually use this information? Let's get into the practical side of things.
Okay, listen up, because this is probably the most crucial part. A Harami is a signal to pay attention. It's not a signal to immediately act. Remember, it's a sign of indecision, not a guarantee of a reversal. That's why smart traders always look for confirmation. Did the trading volume pick up on that second candle? Is another indicator, like the RSI, also hinting at a reversal? And maybe most importantly, is this whole pattern showing up at a really significant price level, like a known support or resistance zone? And of course, you never ever make a trade without a plan for if you're wrong. This table lays out the basic rule for risk management. For a bullish Harami, your safety net, your stop loss, goes just below the low of that first big candle. For a bearish Harami, it goes just above its high. It's that simple, but it is absolutely essential. And a final and very important word of caution. Context is everything. No pattern works 100% of the time, and the Harami can definitely give you false signals. This is especially true in markets with low trading volume, where just one or two big trades can create a pattern that doesn't really mean anything. You've always got to look at the bigger picture. And really, that's what it all comes down to. The Harami pattern perfectly frames this moment of pure, raw market indecision. It's the pause before the next big move. It sets the stage for you, but it doesn't tell you how the story ends. It leaves you, the trader, with the most important question you can ask. Who is going to win the fight that comes next?